Welcome, everyone. I'm Greg Schnell, the Canadian technician, here to host the Market Buzz. This show looks at weekly setups across the U.S. market, and using the tools on StockCharts, we'll look for some long time frame trades. Please subscribe to my articles and Twitter feed. And we have ourselves a rally off the lows, and now we're trying to figure out the direction. And this is, I've written an article that'll be out shortly on Don't Ignore This Chart. And one of the things I talk about in the article is, you kind of see the rollover, and then after the rollover, you get the bounce. And now the question is, which way does the market go? Can it correct itself and head back higher? So we're going to talk a little bit about just looking at the markets through a rollover, and then as the market rolls over, as an example, could we find a scan that would help us? And I will tell you this, that it doesn't matter how you look at the market. You do not know which stocks are going to go ballistic. You know which stocks are set up and could go ballistic. You don't know when is Uber going to break out, when is Lyft going to break out, when is Facebook going to roll over. It's way more difficult than everybody makes it look, and looking back on the chart to say this was the big winner. You should have been in AMD and not in Xilinx, or you should have been in Xilinx and not in Nvidia. That's hard. And just to make sure everybody doesn't beat themselves up on that subject, it's very difficult to find these winners. So today we're going to focus on, whoops, I made a mistake there. I'm going to go back. We're going to focus on finding stocks as they make the turn. And there's a whole host of things to do, but obviously, 8 or 10,000 stocks out there, and you're trying to find the ones that are turning, that are going to make breaks. And we have some different methodologies to look at them through technical analysis, and I just don't know how you do it with price earnings ratios, because the high tech stocks are, PEs of 100 to 1 or something, and they're the ones that are running, and yet it makes, if you're a value investor, it's pretty hard to jump on that train. So today, let's briefly just talk about some of these locations in the market, and then maybe perhaps trying to figure out how to find the turn. And so, first of all, last week, well, for the last 3 or 4 weeks, I've been mentioning, first of all, the market new highs continue. Then I started to talk about how we had a warning shot, and then how you were trapped in a bull market, and then how the bulls leave the ranch. I think those were the titles over the last 4 weeks of the market review. And so we see these underlying currents start to manifest themselves, and the overall market rolls over. And then the question we have to ask ourselves is, as the market rolls over, can we find the winners on the lows? And one of the things that is obvious on this chart, but way more difficult to do, is to buy when things are ugly, like way down here on these really, really, really low levels. And then the question is, on the bounce back up, being flexible enough to get out of those trades, because nobody wants to, if you've got a winner you've been telling everybody about every week at the golf course, or at the squash club, or whatever, it's very difficult to sell the winner, the one that made you so much money, and then all of a sudden you ride it all the way back down. And I think Nvidia is a good example of that. When that stock rolled over, everybody thought it was going to continue to be the winner. Jim Cramer named his dog after that stock. All of these things are out there. Now, the problem is, having the courage to sell when the trend ends, and defining that end is important. But secondarily, how do we get back into the market? And one of the most difficult things to do is, on the bottoms, trying to pick stocks up on the way back. Is the market ready to turn higher, and what clues could we use? So let's just talk currently about where we're set up here. And I'm not as bullish as some of the other people, and I'm not trying to be bearish. The charts are pointing me that way, so I'm going to show why. And when we have, so here's the bullish percent index for the NASDAQ composite. And, I cover this off quite regularly on the weekend market review. I would encourage you, if you haven't been watching it, just to go in and take a look at kind of a 1 hour summary of the whole market, see if there's anything in there for you. But uh, you know, back here we saw this way back in 2002. We saw where the market struggled to try and get going higher from a relatively low level. I'll call it 55% of the Nasdaq stocks were were making. Uh, were on buy signals, and so they rolled over and down we went, and that was into the late 2002 low in the Nasdaq. And when we rallied out of that, we came back up and we kick higher. Well, at this point, this is a very difficult spot. Are we actually ready to go lower, or are we going to, finally make the curve higher? And it's that kind of difficulty that the market gives us all the time. So here we have the same thing where the market struggles for 3 months or something in terms of bullish percent index, and rolls over, gets down to this 40 level. Now, this was a pretty good run up for roughly another 6 or 9 months, and then kind of struggled again and fell back down. And that was all through 2002 to 2007. Now we roll in and the market gets more difficult, and we bounce way up, and we have a big bull enthusiastic market with lots of stocks moving above their 200-day moving average. And we continued to um, you know push higher, and we're up here for a good 6 months, 12 months. This is pretty bullish. And then we start to get weaker, and then we start to make lower highs in bullish percent as the market's going up. This is going down, and we get into this place in here where it's quite difficult. 2011, it's not very weak. It's 55% of the stocks, and we keep thinking things should improve. And all of a sudden we have the European financial crisis, and I think that was the pigs, Portugal, Ireland, Italy, Portugal, and Spain. And so all of those stocks had, or countries had trouble, and so we had a big pullback. And then we got down into this terrible level, and then we rallied from there. So one of the things we're trying to do with technical analysis is try to figure out these inflection points. And I've noted 5 different circles on this area where the stock market kind of can't get more net new highs. It just keeps struggling, and then it corrects from there. And again, usually these come after some sort of downtrend is already, in terms of momentum, is in play. One of the cautions I have here is that we got up to 55% recently. We could only get up to 50% as the market pushes to new highs, and we're already back down to 45% of the stocks are above the 200-day moving average, and 45% of the stocks are on a buy signal. So the market's definitely, I think, weak in an overall perspective. And you have this huge downtrend that's been building, and then you kind of go, well, the market continues to push higher. We just bounced 1,000 points on the Dow. Why it's probably going to go on to new highs. And the one thing that I would say is the market, as the breadth narrows, or as the width of the market river narrows, how do we make ourselves cautious? And we're using these internals to help guide us. So as this market, I think, tops, we end up having not very much stock participation in the big bulls in the market. Roku's been wonderful, and we start to see some great leadership in AMD. It's been a roaring stock. So you see these big names, but underneath the surface, a lot of these stocks are pulling back. And I think I heard one of the commentators say, the energy oil's up 4% this morning, and the energy stocks still aren't rallying. And that's the point, is that a lot of the times in these bull markets, that's what you find is all of a sudden entire sectors just can't even rally on good news. And so we want to keep being aware of that. But here's the NASDAQ 100. And on a big bounce here, we still only have 46% of the stocks on a buy signal. Now we have 70% of the stocks above their 200-day moving average, but that's down from 80 in early July. And so 10% have given it up. And it's this sort of big pullback that I think, the NASDAQ 100 doesn't give us the guidance that we see in that broad market from the bullish percent index for the NASDAQ composite. And what we saw in the NASDAQ composite was, as the market made new highs in January 2018, it was up at a new high, and then it just keeps dribbling lower. With the NASDAQ 100, we get these sudden spikes up and these spikes down, and it's much more wobbly. But I think it's important to keep context of what the rest of the market is doing, not just the NASDAQ 100. Okay, The second concern we have to look at, here's the New York Composite, and you can see we're down to 45% on this, and about 55% on percentage of stocks above the 200-day moving average. And to me, you're more than welcome to go and look at this chart and see if there's other data that I'm missing. But I see this big downtrend in 2014-15, heading into October 2016, couldn't get much above 55%, and down we went. Back in '07, we had the same sort of thing, and this was the May market top, call it 55%, 60%, somewhere in that range, and all of a sudden down we went. So are we here? I don't know, but we've been on an economic expansion for 10 years, and I think we are. And I get it. Other people will disagree. That's fine. Is all I'm saying is there's a lot of stocks that are not participating, and in the big broader market, we only have a few that are on buy signals. And when the Nasdaq goes from 70% to 45% in a couple of weeks, it tells you how uncomfortable the market is. So when we work through this, one of the things I want to find, as an example, we had the market pull back down into the lows of late December and then start to bounce out. And when we have that situation, we want to be able to try and buy good stocks near the lows and get them rallying up. And then when they start to fail, we want to use our other signals like these bullish percent indexes to help us realize it might be time to take profits. And while the stock is still rising, it doesn't mean you have to take profits, but it definitely means you have to put your stops a lot tighter when you're starting to have a lot less support for the overall market. So, watching these changes take place live is harder because it looks like, well, we still got 50% support, and the market has bounced in here many times on this S&P 500 chart. So why won't it bounce here? And that's a great perspective. I think it's the other perspective where the rest of the market is so weak that these last few bulls are still holding everything up, and then all of a sudden they start to leave the ranch, and that's when you really get the difficulty and everybody gets more surprised that something bigger happened. So again, I don't know the extent of the pullback. I just know that there's not a lot of breadth here and the market is weaker. So we're going to skip out to a commercial here. And when we come back, we're going to look at some individual stocks or some simple scans to just try and find things turning back up off these lows. And the reason I want to do that is after this market pulls back, then we want to be ready and in a position to attack it from the upside. I do have two speaking engagements coming up in the next in September. One is at the TSAA Association in San Francisco at the Golden Gate University. And the second one, that's September 13th, 14th in there. And then the second one is the Toronto Money Show coming up in September, around the end of the week there, September 18th. So I'll be on the road for a couple of weeks in there doing those traveling shows. If you can book those into your schedule, I'd like to meet you. That would be nice. And with that, we're going to cut to a commercial, and then we come back. We're going to start the scan engine and just look for stocks on these turning points. Okay, thanks everybody. We're back. And what we're talking about now is we're going to go into just some simple ideas for scans. And one of the things that we need to try and figure out is, how did the markets work a while ago? And then what clues could we use for finding them on the upside? And so we know that the software industry has been on fire since that December low. And it actually made its low December 24th and made a higher low the following week. Everything made a low on this low. But what we don't know is how fast they're going to move up. And of course, that whole industry group really made a nice move. And so there's a couple of things we could do, right? We could look on individual stock level, and we could look to just try find stocks that are outperforming, and in this case, this sector was outperforming the S&P 500, so that could be a clue. And when we're looking at an individual stock, we want to see them start to run. So one of the examples might be, and let me just go back to the scan engine. You can actually pick a trading day by changing this number at the top of the scan editor. So I've gone into Technical Scan Workbench on the Your dashboard. You scroll down, and Technical Scan Workbench is there. We click in on that, and it's going to come up with just this opening line sitting there, and when you hit create a new scan. And so when we do that, one of the things we need to do to go back and just understand a little bit about history is you can just put in here uh, a a time period. And so I've chosen January 4th. So what I want to know is stocks that started to turn up January the 4th, and then we could go down to the 11th and the 18th and start to keep working through to see as they improve. Now, again, you could pick a stock or an ETF, what groups are starting to break out, and you can pick here's the weekly PPO line, and I want to cross the weekly PPO signal. And if we just go to the S&P 500 or something, be better if I was typing into the box. If we go to the S&P 500, too many S's. Yeah, S&P 500. Sorry about that. Okay, let's try this again. So what we want to look at is this turn in the bottom here. And again, I'm looking January 4th. So nothing's turning on this particular date, and obviously everything is sold off. So if we just go look at the index itself, here we see the S&P 500, and it actually takes a long time to get back above the 50-day moving average or the 10-week, and even longer to get up above the 200. So the real question is, well, it's below all of these moving averages for 4 to 8 weeks. Do you really want to be out of the market and only be in the market once it gets above those? Well, as you'll notice, some of the biggest percentage moves up happen near the beginning and not so much near the end. So I think we want to be as part of this up ramp. Okay, what we see on the PPO indicator is, we had a big downtrend here. We got down to a very low level, the same sort of level we got to in 2015, 16. And during that time period, I'm going to just try and get this to move out. There we go. And what we see here is roughly mid-January, this PPO crossed and gave us a buy signal there. That's not too bad. That's pretty good, actually, that we got that roughly in here the third or fourth week. And the market came up the first week of January to here, spent 2 weeks going sideways. And it was really on this third week that we moved, kind of out of this little pennant pattern and broke out to the upside. But when it did that, it also crossed our signal line, and the market was improving in here. But one of the hard parts is just in general, how do you know when the market's ready to improve? We don't, but we also have some clues. Remember on that bullish percent index, we saw that bullish, the percentage of stocks on a buy signal were at some of the most significant lows in 15 years, and they were way down near the bottom. One of the clues that gives us is to start looking for lows, right? And so here we actually had, this low, this low, this low, this low, this low. The histogram's actually getting worse and worse and worse. We have an extreme volume spike, much like we had in February. And when you get these extreme volume spikes, they can be good information. Well, we haven't had that yet. We just started this rally this week, or this pullback, and now this rally. And so one of the things that we have a clue on is by using multiple charts, not one, we start to get this breakout. So we want to look right in around here. So we're going to go to January the 4th. And we're going to look for stocks that have a PPO line crossing the signal. Again, going to the S&P, this is the PPO line, this is the PPO signal, and we want to start to find stuff turning up here. Now, you can do this on a daily. Again, my market buzz is about weekly, so people who want to trade for a week, go ahead. I'm looking for big uptrends, and what we want to find here is stuff breaking out. So when we look for the PPO line crossing the weekly PPO signal and hit run scan, and I'll talk about this grayed out line in a second, uh, we're going to get this results page. Now, two things happen here. One is to just quickly say, okay, first of all, what groups are starting to perform well? And when we go through this, utilities were near the top. So that's not a surprise. What happens is as everybody gets scared around here, everybody's kind of congregated into utilities. So to see utility stock perform well in here, that's not a surprise. But what should happen is they should actually start to decline, and the growth or whatever the next group is going to be starts to improve. So here's some technology names starting to pop up, and we see this. Uh, you know, let's go put these in a chart list, and we'll just find a dumping ground here. And so we'll put this one in scanning for John, and dump this in now. Again, once we get into the group, we can go and add columns, and one of the columns we want to add is industry or sector or whatever. So we're going to add sector, and we're going to sort on that. And is all we're trying to find is where is the strength. And guess what? Here's materials, and it was all gold and precious metals, and they've been strong for 6 months, right? They were a really good clue coming out of there. And I know a lot of people have been impressed with the semiconductors and the software stocks, but these material stocks, if we just go year to date now, um, and see what they've done. Again, these were the ones that were making the turns back then. Look at these gains: 98%, 44, 50, 100%. There were lots of big moves in this precious metals. And so there were some clues there. But the other thing is, here's your industrials, and we had a few names move, but these charts weren't tremendous. Um, they came off the lows. It was helpful. This is up 32%. And again, the chart looks good. But if I show you the same chart on a stock that moved up, whatever, here's 80%, they look about the same. The difference is that the scale changes. And so, anyway, as we come through this turn, you're looking to start to see what stocks have really made a big move. And, we may have won, may not have won. You still have to sell out of these names. My point would be that you're going to pick a basket of stocks coming off of these lows. So you don't put all your eggs in one basket, but you're trying to find, as stuff turns, which groups to get into. And, uh, again, I think you want to stay away from the defensives like the pipeline, clues and stuff like that. You want to get into something that's moving a little bit better. And here's Zynga just as an example. Here was a growth stock. Look at the move off of the low. It was ballistic. That's something that we might expect. Here's TriPoint Homes, not quite as good, but it was still a nice move from September up, from 11 to 14%. And so you're going to find that you're better off to take a group of stocks and move across that. Now we can do a couple of things here. We can change it to 145 days. So this is a week later. And when we do that, it's going to move it out here to January 11th. And now we're going to run our scan based on that. And maybe I didn't hit run scan. There we go. Scan results coming in. And so we had 134 before, and now all of a sudden we have 283 stocks starting to climb out of the hole. So that's fine. So that's good. But now we're going to go replace an existing chart list with this result. And let's go put them into John again. And when we do that, then we can start to see. So as the market progresses, we can start to look and see what kind of stocks are starting to take off. And remember how I mentioned that there weren't that many technology names? Well, look what happened the week following. I mean, all of a sudden, this thing just exploded. And this is, out in that second, third week, and the S&P still hasn't crossed up yet, but some of these names have. Now, here's what I think is important looking a little bit later on. So we're out here, this red green area here is telling us what's happened today. So up to the end of August the 8th. And one of the things you'll notice in all of these technology names, actually, let's go here. I want to show this differently. Year to date, was now they're not doing so well. But back then, this was 172%. This was 455%. I wouldn't have expected that out of Diebold. But in general, the whole sector started to fly, and you're trying to find stuff moving quickly. Well, you didn't have to be in on the lows to find it, but all of a sudden you're starting to see this whole group, and then we could sort obviously by industry group and uh, go down here, and we're going to just I'm going to scroll all the way to the bottom to get down to the software group so that we don't have to look at scrolling too much. But here's 20 names that blossomed. And Zscaler, I think that one was on most people's list. Team, this stock's been up great, 62% since the beginning. Splunk is only up 25, but it's been one of the names to watch. PayPal is now only up 25%, but coming off the lows, these were pretty strong names. And so I would encourage you to not just pick the day of the low and the week of the low, but watch for the change in trend. And obviously, you want to be watching for the growth area. And so now here we are at the other end, and we're not seeing that same sort of thing, right? We're not seeing the technology and the software names bubbling up like they were. But as the market comes down to a low and starts to turn back up again, we're going to have that opportunity. Now, I think the biggest thing for all of us out there is to try and make sure that we're focused on finding stocks that are starting to set up. And look at the semiconductors that set up again the second week of January. Um, these were nice moves. Now, again, nothing wrong with a 30% gainer off the low. You've outperformed the S&P 500 and all that kind of stuff. Um, but not all of the charts that were winners that week held on. And I think what you'll find is you're going to have to rotate a bit. So you're going to get faked into some and faked out of another. But you're going to have to try and prune your list quite quickly. And when you start to see semiconductors start to break out or whatever, consumer discretionary at the time, maybe those were some good names. But here's Enphase Energy. I'm not sure I would have picked that one up. Look at the chart before January. It was absolutely flat. And now this thing's gone from 5 to 30. The only way you're going to find those names and stay in them is by continuing to monitor the market every week and watching for stuff on the leaderboard taking off to the upside. So anyway, hopefully I've given you just a simple idea, but take your technical scan and then watch how the market changes over the week. So we feel like a low is in. We've seen the bullish percent index get down to nothing. All of a sudden we had a 1,000-point rally on the Dow and we started to move up. So let's just say that the 1,000-point rally we had in the last couple of days here marked the new low. I don't think it did. I could be wrong. Doesn't matter. What we know going forward is we're going to keep watching for clues in the changing marketplace. And as those clues start to come forward, I think that's a pretty important place to just be aware of what's starting to break out again and turn back up. So try to use the scan engine to help you just see the big picture and then focus in. And if you're still seeing utility stocks leading the list, that probably tells you what you didn't want to know. But when you start to see the other sectors really start up, industrials, cyclicals, consumer discretionary, technology, then that's going to help you find better winners heading into the future. Okay, thanks for taking the time to join me on Market Buzz. Market Buzz airs live on Wednesdays and Fridays at 10:30 a.m. Eastern, 7:30 a.m. Pacific. You can also catch replays on the StockCharts YouTube channel or on StockCharts TV. And don't forget, my market review comes out on Saturday. Try and catch that. Thanks, everybody. Bye-bye.